Good morning, Mark Soderberg with ADM Investor Services with your morning ag update. Quiet trade overnight, mostly red on the screen. Corn prices right now, the shining star, trading 1 to 2 cents better. Soybean prices down 5 to 6 near session lows. A meal is off of $1 to $2. Bean oil is down about 50 points, and wheat is just a follower right now, looking about 1 to 2 cents lower. Deliveries against the September contracts were generally light. There were no corn, 3 contracts of beans, 21 oil, and 7 contracts of oil, 21 contracts of meal. Got a little bit heavier in the wheat, 181 contracts in Chicago and 328 deliveries in Kansas City. Corn did rebound late yesterday on some speculative buying. We had funds buying about 6,000 contracts. This afternoon, CFTC report will likely show money managers still short about 135,000 contracts. Speculative traders yesterday were light sellers across the soybean space, while buyers of a couple thousand contracts in the wheat. Also supporting corn yesterday, the EU cut their corn production estimate 2.5 million metric tons to 57.6. That is now just below the USDA forecast at 58. Drought this summer did cut into this year's crop. Also, the London Stock Exchange, they came out yesterday with a U.S. corn production forecast well below the USDA. They're at 16.32 billion bushels, some 420 million below the USDA estimate in August. So I think there's just a growing sense in the marketplace the USDA's production and yields are just too high. And historically, there's some evidence to support this. In the August report, since 1990, there's been 18 years where the USDA raised yields here in the month of August. 12 years, the final yield was below the August estimate, with only 6 years that final yield was above it. So I'm definitely leaning a little bit lower right now. Corn demand humming along. New crop exports hit up to 739 million bushels. Double what it was a year ago at this time. U.S. corn remains competitively priced in the global marketplace. And when you look down in Brazil, right now there's 21 active corn-based ethanol projects. 12 of these are actually in the construction phase. If all of these are completed, it could add boost ethanol production by 50% by late 2027. If all projects are completed, this would require an additional 14 million metric tons of grain to produce another 8.2 billion liters of ethanol. So recall they did up their ethanol blend from 27 to 30% that began here at the beginning of August. Resistance for D's corn is at the 50-day moving average at 415. In beans, still no trade deal with China. China has been increasingly turning attention to Argentina and Paraguay to fill Q4 needs. Nove beans has support below the market at the 100-day moving average, 1029 3/4. Fresh, a 3-week low overnight for October meal as it rests near its 50-day moving average. October oil has so far held support at its 100-day moving average at 51.35. We got census crush after the close on Tuesday, expected to come in at a record high for the month of July at just over 207 million bushels. Bean oil stocks expected to build to just over 1.9 billion pounds. There's also history to suggest bean yields are too high as well. 14 times since 1990, USDA has raised their yield forecast in August. 9 times final yields were below that August estimate, with only 5 times at being above it. Inside trade for wheat here overnight, or quiet trade for wheat, really just a follower right now. Still waiting to see whether President Zelensky and Putin will meet for some peace talks looking to end the war in Ukraine. Thank you for listening, everyone. I hope you have a great holiday weekend.